Everyone knows that they should be reporting on their business financial performance. But most people jump into Xero, they look at the generic reports and they go, this means absolutely nothing to me, and they basically stop there. The reason is that Xero's reporting is built for everybody. It's built for trades and accountants and lawyers and osteos and every type of business that there could be. The result is that it is super generic. E-commerce businesses don't need generic reports. You need reports that are specific to you, that show the breakdown of your margins, and give you the information that is going to help you make better decisions. G'day, my name is Matt. I'm the director of Day One Advisory. We're a bookkeeping and accounting firm that looks after e-commerce clients. And in this video today, I want to talk to you about how you can edit the Xero P&L report so that it is more specific to your business and therefore more useful so that you actually jump in and look at it. So in Xero, we jump into reporting and profit and loss. And you'll see when this opens that it is going to be the generic P&L from Xero. So the sales are all going to be mixed up. You've got some overhead costs like freight, etc., down the bottom within operating expenses. We've got gross profit, but we don't have it expressed as a percentage, and we've got no data here about things like MER or blended ROAS. So what we're going to do today is do some quick edits to this that you can pretty easily deploy in your Xero file to make your reporting more useful. Now, one thing I would say as a caveat to this is only going to work if you have a decent chart of accounts and you are sending the data across from your online store like Shopify into Xero via something like A2X, and you are sending it to the specific breakdowns. So what I mean by that is you can see in this case we've got sales, but we also have our refunds and discounts expressed separately. If you weren't using an integration, everything would just drop in sales and it's not particularly useful. So the starting point before you even muck around with these reporting is make sure you go and get your chart of accounts right. If you jump onto our website, we have a Excel version of the chart of accounts for a e-commerce company. You can download that, upload it into Xero. Happy days. Now, the way to edit a P&L report is to go to Edit Layout down the bottom here. And there's a few things that you can do that I'll take you through in general. The first is that you can move things around. You can drag them to in different orders within a particular category. You can move things from one category into another category. You can do things like group accounts together. So for example, we might want to group, in this case, accounting and legal fees. And we can call them, let's call them professional fees. And then you can collapse that group. You can add things like groups here. You can also add in formulas. So there's lots of things that you can do to manipulate how the data shows up within your P&L. And all of these things that are listed here are just the chart of accounts. So get your chart of accounts right and they will be in your P&L ready to be moved into the respective spots. So the first thing we did was within trading income, I've reordered the sales and the freight and the discounts and refunds just in a way that I think is more usable. The next thing that we're going to do is we're going to add a formula for gross profit. So not only do we see gross profit as a real or a whole dollar term, we can also see the margin. And the way that you add formulas is you add it from there and then you go into the formula over here and you add the items. So we're going to do the gross profit divided by the trading income. We're going to express it as a percentage and we're going to go down here and name it the gross profit margin, or we'll call it gross profit percentage. The next thing that we're going to do is we're going to add another layer of margin. So everyone has a different version of this. Some would call this contribution 1 instead of gross profit margin. They all mean effectively the same thing. What I'm going to do is add another layer of profit, which is your gross profit minus your direct ad spend, and that gives you your contribution margin. So we're going to add a group to start with, and that group is going to be called direct advertising costs. We're going to make it debit positive. And then we're going to put our advertising account into that new group that we've created. Now what we need to do is we need to add a formula, and we're going to call this formula contribution margin. If you were going to have multiple layers of contribution margin, you might want to call it contribution margin 1. And this is going to be our gross profit minus our direct advertising costs. This is real dollars, so we're not expressing as percentage. And then what we're going to do is we're going to add another formula to express that amount as a percentage. We'll call this one contribution margin percentage, show us percent, and it will be the contribution margin divided by the trading income. If you had you might want to go to another layer, which is your indirect advertising costs. So that might be things like UGC or your actual video editors and those types of things. You might want to show those indirect costs in a separate section and then have another layer of contribution margin. This is the Xero demo file. I don't have enough data to do that, so I'm not going to bother. The other thing that I'm going to do, which I think is probably a bit overkill, but I'm going to take some of these things like depreciation, income tax, probably the only two, and interest. I'm going to group them, and I'm going to move that group below my profit line. Depreciation, interest, and tax. I'm going to rename my net profit to be called earnings before interest, depreciation, tax, and amortization. And then I'm going to add a formula down the bottom that is our EBITDA minus the depreciation, interest, and tax. Just double check that's positive, correct. I'm going to call it net profit. The reason that I've done that is that more often than not, in small business world, particularly in Australia, we are very boring when it comes to valuations of businesses. They are generally valued on a multiple of their EBITDA, usually the normalized EBITDA, which removes things like private expenses. The reason I like putting that there is that you could, if you wanted to, then add a formula that said, okay, well, if I'm going to run my P&L on a monthly basis, and let's say, for argument's sake, that my business EBITDA times 12 gets me my annual EBITDA number, I'm then going to times that by 3.5. So I'm going to try and sell my business for a 3.5 times multiple, and I'll go here and call it a valuation. Now, that number, incredibly subjective. It depends entirely on your business. It depends on what product you sell. There's so many moving parts. For a sub-$1 million, $2 million brand, it's probably in the ballpark. If you're a business that does 20 mil turnover with an EBITDA of sort of 20%, then you might be in the 8 to 10 times bracket. It entirely depends, but I like to have it there as an option. It gives me a bit of context about how the business is going. Now, those are the updates I'm going to do for now, and we'll go back and have a look at what the P&L looks like after those have been done. You'll see here immediately, the first part is we are now looking at the income in a better order. Again, subjective, but in my view, a better order. We've then got our cost of sales, which gives us our gross profit. We've got our gross profit expressed as a percentage, which is everyone would love a 96% gross profit margin. Probably not realistic, but that's what the demo file's making for November, apparently. We've then got our contribution margin, which is our gross profit minus our direct advertising cost, and that gets us a contribution margin of 85%. We've got some other income of interest income. That gives us then we've got, operating costs of 20 grand. We actually lost money this month, so this one tells us that our business valuation is negative $66,000. And our net profit is also negative because we didn't have any depreciation posted. Now, there is one other thing that I would add to this, and this is sort of more, any business could do this, but specific to ecom, and that is that we're going to add a formula to calculate our MER or blended ROAS or customer acquisition costs, or whatever you want to call it. I'm going to call it MER, and I'm going to express it as a multiple, not a percentage. So we're going to do the contribution, the trading income, divided by the direct advertising costs. If you wanted to express it as a percentage, you would just do that formula the other way around and click show as a percentage. Now, this business is probably going to have a pretty healthy MER because it's really got no advertising costs, and it's also the demo company, so it doesn't have real e-com data in it. You can see here that for the month of November, the MER is 8.7, which means that for every dollar we spend on ads, we get back $8.70 in sales. So that is how I would edit a P&L. You can go further than that. We've got some clients who do this whole here by geographic area. We've got some clients who do it wholesale versus retail. We've got some clients that do it, in fact, by product when they don't have many SKUs. But this is the basic version that I would use and deploy in most e-commerce files. If you want, you can then manipulate the period for this. So you could look at it for this month or last month. You could compare it with a certain number of previous months or years. You can do this financial year to date or last financial year, etc. So there's lots of different ways you can do this. And you can also go and consolidate operating expense accounts down here. For example, if you didn't need to report on your $19.91 of printing and stationery, you could roll that up with other things like office expenses or put it into a other operating expenses account. So you can do things in here that are relevant to your business, and I would encourage you to create a report, start using it, start being curious about it, and then as you go, you can manipulate things depending on what you want to see. Once you have done your report and you're happy with it, the next step is to make sure you save it. So go and save it as a custom report, name it whatever you want to call it up here. Make it the default if this is the report you want to see every time you open the P&L, and then hit save. Let's call it 2. Now, this report, once you've saved it, is now hiding in your custom reports. So when you go to reporting, all reports, you will have a custom report tab here, and you will see the profit and loss 2, which we just created. Now, this one's been favorited, so that means that it should by default show up in my report here, and every time I run a P&L, I will get that default view. That is, I suppose, a quick overview of how you can edit a P&L in Xero and how I would edit it if I was running an e-com business, and certainly how we edit it for our clients. It's pretty straightforward to do yourself. However, if you don't have the time or you get stuck or you just can't be bothered, reach out to our team. We need an invite to your Xero file. We can jump in. We can deploy the custom reports that we have saved within your Xero file reasonably quickly. And then we can take you through how to use that on a day-to-day basis. Hopefully it's been helpful. If you need anything, reach out to the team at Day One Advisory. Always happy to help.